And what's cracking, guys? Welcome to the Mango Grove. My name is Krisha, and this is today's Bitcoin analysis video. We are only going to be sticking to Bitcoin today. Now, I particularly have been trading the altcoins, okay? So if you are someone who has been interested in the altcoins and you have been enjoying the altcoin updates, let me know in the comment section below. That way I know that, you guys are interested too, and that I'm not wasting my time doing the altcoins at the end of every update, right? So yeah, take some time, let me know in the comment section below, and while you're doing that, also let me know what coins you guys are interested in. That way I know what to cover moving forward. Alrighty, so with this, guys, we can jump into today's agenda for Bitcoin, because I do believe that we have some amazing price action to, unravel today. So here's what I have in terms of our talking points, okay? We'll be going over that one-day bearish divergence that we were looking at initially, right? So yesterday, Sean went over it in his video. I had also spotted out for you guys on the dashboard. So we'll be talking about that bearish divergence, and I'll be giving you guys an update on that divergence play. Okay, in addition to that, today's second point is going to be Bitcoin's trend continuation, because as things stand right now with the most recent price action that we've gotten on the charts, it appears that Bitcoin does want to see continuation here. So then the next question is, where to from here? What are the next bullish targets? Now, while I did present a target in my last video, I do have one more additional target, primarily extrapolated from a pattern play. So we'll be going over the bullish targets as well. And then finally, I will also be talking about a 4-hour dashboard bearish flag that just went off, and as well as the conditions to the bearish flag. Now, before we jump into the meat of today's analysis, it goes without saying that like button goes a very, very long way. So if you guys have been enjoying the content that Sean and I have been putting out, make sure to smash that like button, because it helps encourage us, and it also helps the algorithm know that you guys are liking this content, and it will push it out to you more often. Okay, so with this, we can jump right into point number 1, the one-day bearish divergence update. Perfect, so here we are, Bitcoin on the daily time frame. I also have my RSI oscillator on right here, okay, since we're going to be talking about the potential bearish divergence play. Now, for those of you who've been following the videos for some time, you guys know exactly where we found the potential bearish divergence play from, right? That was primarily extrapolated from the Mango dashboard. The Mango dashboard had a potential bearish divergence flag that went off not too long ago. However, now if we just assess Bitcoin's trend on the dashboard, by the way, guys, for those of you who do not know where to find the dashboard, it can be found on app.mangoresearch.co. Okay, so BTC USDT first line, the trend, guys, is still long. So this trend is still very much in bullish territory. It did not kick you out of your trade. Okay, the reversal came in 16 days ago. And if you manage to catch your trade on this, good for you. You're up by a good 34% on that trade. Okay, volatility sitting at 71, which is all right, telling me that the bulls still have a bit more oomph left in them. There could be a bit more juice left in this long trade. However, now if we look at the flags, okay, the last time we looked at this, which was just yesterday, Sean covered Bitcoin just yesterday, this potential bearish divergence flag was still on. However, now if you look at this column, that flag has now been deactivated. What does the flag look like? It looks like this right here, the thermometer with a down arrow on it. Okay, if you just hover over it, it says potential bearish divergence. Now, these flags are here to draw your attention to potential developments on the chart that you might be missing out on. Okay, so now once again, we had this potential bearish divergence that was on Bitcoin as well, however, just got deactivated because the conditions to that potential bearish divergence did not trigger. Now, what were the conditions to that potential bearish divergence? For those of you who recall from my last video, we had certain conditions for that divergence play to trigger. So first, let's go ahead and spot out the divergence. The divergence was this. We saw lower highs on the oscillator, on the RSI, and we saw higher highs on price action. Okay, that is potential bearish divergence. Here's what we were looking for. All right, we were looking for price to maintain this wick high right here as the highest point in the entire consolidation, okay, as well as, understand the words that I'm using. So it was this, and we wanted price to take out this wick low right here. Okay, which came in at around $22,314, which was the lowest point in this consolidation. Price did not do either or. Okay, we maintained this wick low as the lowest point on the consolidation, as well as we took out the wick high right here, thus invalidating the potential bearish divergence. Now, this is why it's very, very important to draw in parameters to which the divergence actually triggers. Okay, so if you're looking at divergence plays, if you're someone who likes playing the divergences, make sure you're drawing out your conditions on your chart at all times. Now, every time I do bring up a divergence to your attention, I will be setting in conditions. So if you guys want to take note of them, go ahead and do so. Okay, now for those of you in the Mango Seed program, you guys have an entire dedicated module only to reading divergence plays, and Sean does a phenomenal job in really breaking things down. I learned it from there as well. So make sure you're going ahead and giving that module a rewatch if you haven't already done so, because at these junctures, the divergence plays can be very, very powerful. So now as far as this divergence play is concerned, this has now officially been invalidated, which brings us to our next point on the agenda, which is Bitcoin trend continuation. I put in a question mark right there because I think it's important to ask the right questions here. Does this trend actually continue, right? What is it that we were looking at to anticipate a continuation in trend? Well, there were a couple of things that I personally was looking at, right? I was looking at price against support and resistance, okay, especially a key region of resistance that I brought up to your attention in the last video, as well as an uptrend signature that has been established on Bitcoin's 4-hour time frame. All right, so let's go over both right now. We're first going to go over, well, price up against resistance. I'm going to go ahead and clear out all these random brushstrokes, clear out my chart. Brilliant. And now I'm going to go ahead and bring up my current zone of oscillation. All right, I'm just going to actually hide the text. Perfect. Now, as far as Bitcoin against its zone of oscillation is concerned, now remember, I'd given you guys certain regions of support and resistance that I initially had extrapolated as targets, right? Before price even got up here, I'm like, listen, these are the major targets. And when price gets up to these targets, those targets then turn into resistance if we see consecutive rejection candles on there. Now, if we just look at price action across these regions, okay, the first target was 20,859. We got up there, consolidated, and then rallied to the upside. The next target came in at 22,944. Now, that was that critical target turned region of resistance that we were looking at, right? And why is that? Because if I just zoom in to this price action, notice every daily candle, we had 1, 2, 3, 4 daily closes underneath that region getting rejected. All right, at 22,944. However, this is the first daily candle that we actually managed to close over 22,944. All right, so we have one confirmed close over the region. Price is coming right now to test that region of, well, resistance turned into support. Now, for me personally, I want to see additional strength. So if I can see another 12-hour candle close over 22,944, I'm going to be looking at that as a bullish stance. Okay, at which point I will be looking for continuation to the upside. Now, another thing that was alluding to continuation, I was telling you not to jump the gun on any short positions on this region, was, well, the signature that I'd spotted out for you guys on the last video. And that signature can be found here on your 4-hour time frame. Now, how do we find this? Well, we first looked at price action to see where is the primary trend really being established, right? Bitcoin has been in an uptrend for the past 2 weeks, but where is the trend being established? What time frame? And we found that the 4-hour time frame is marking out Bitcoin's trend extremely well. Right? Ever since it broke out of 16.6K, the 4-hour time frame has been the time frame to be looking at. In fact, if I take you guys on over to the dashboard, get on over to the 4-hour time frame, you'll notice Bitcoin USDT has been bullish long. We got a long trend 14 days ago. So for over 2 weeks now, this trend has been long. It has stayed long. Okay, if you caught the trend based on when the 4-hour went off, you're already up by a good 28% on your trade. Alrighty, so now getting back on over to that chart, the signature that we established here is that, okay, the trend is on the 4-hour time frame. Is there any indicator catching it right now? And yes, there is. That was the 4-hour dynamic indicator. Okay, so now you'll find that every touch of the dynamic cloud was met with a swift pickup by the bulls. We had one critical visit right here, okay, no confirmation. We had one slight close underneath the cloud with no confirmation. Now, what is a confirmation? Well, you guys already know this. I usually look for 2 consecutive closes either under or above the cloud as a confirmation of a break. Okay, now we only had one close right here and then swift pickup, rally to the upside. Now, once again, right here, we had a critical visit of the cloud. Any closes under the cloud? No, not a single close. Okay, now it's during these junctures of the market that you should be catching your bids at. Now, I know that it's easier said than done. There's so much emotions that pour in when price is, well, dropping. You can see it bleed. Not everyone has the mental fortitude to be getting in their long bids right here, and I completely understand that. These are the hardest bids to catch, but also the most easiest ones to manage. Because if price broke the dynamic to the downside, you know when you are wrong very, very fast on your trade. Because now imagine everyone who poured into a long position right here on this breakout, or on this breakout, or even on the middle of the zone. I mean, sitting through this was not easy. Suddenly, you're not thinking of building your position, you're thinking of letting go of your bags, right? So it's very important first to see where the trend is being established, and then see if there's a signature that it's following. Is that region of support that has been critical and has been, accounting for all of the bounces that we've seen throughout the uptrend. And well, we found one. In fact, we found another one too, right? So the first one, the strongest one, is the dynamic. But in addition to the dynamic, I gave you guys another system for those of you who did not have access to the dynamic. And that was the 21 EMA, right? In conjunction with a critical region of, well, support. And we had marked out this wick low right here, which came in at around $22,314, right? Which was this red box territory. Did price lose this? No. No, it did not. Right? We saw critical bounces off of this region closing over. And then we finally took back the 21 EMA and rallied to the upside. Right? So this signature, guys, is still intact. Now, the main question is where to from here for Bitcoin. So we know, okay, this uptrend signature on the 4-hour time frame is still here. It's still intact. It still wants to play. Where to from here? Well, as soon as we start seeing additional strength, so I want to see the next 12-hour close over our critical support at 22,944. Okay, if we get that, I'm saying, okay, that is strength on the chart, at which point I will be looking for another rally to the upside. So now we have two targets. The first one I had already brought up to your attention, which is the volatility adjusted target, which comes in at around $25,000. Now, I have extrapolated that out of price action. However, there is one more additional target on this chart, and that is the bull flag, apologies. Okay, that is this bull flag that has just broken out. If I plot it on the break, where will that take Bitcoin up to? That will take us up to $25,559. Okay, that is the second target to the upside. So we can sort of mark out a little zone of, a target / resistance, okay? But that is going to be the next target that I gun for on Bitcoin's chart. Alrighty, if you guys want to go ahead and take note of these numbers, please go ahead and do so. Alright, so now after all of these nice, beautiful, bullish moves that we've seen on Bitcoin's chart over the past 12 hours, is there anything on here that's pointing to, well, this being a bull trap? Is there anything on the chart? Is there anything on the dashboard? So here are my thoughts. Would I still recommend being cautious in this region? Yes. Now, there are two primary reasons for this. The first one being we are heading into a major event, okay? The major event being in less than a week, we have the FOMC meeting that's coming out. And what we need to understand right now with the FOMC meeting is market participants are very, very optimistic. If you're looking at the target rate right now, here's what people are forecasting that Jay Powell actually comes up with. So now 1.7% of people say that the Fed is not going to raise rates at all. Okay, so there's nothing on the books, 1.7%. However, majority, 98.3%, believe they're going to raise it by 25 basis points. Okay, which is still down from what they've been raising it by over the past, several months now, right? They had been increasing it by 75 basis points. Just last month, they raised it by 50. And now the market is feeling a lot more optimistic and saying that, you know what, they're going to drop it once again to 25. Right? However, if Jay Powell comes out and says that, nope, we're going to be sticking to 50, what we need to understand is it's this number that's being priced in with all of these rallies that we're seeing across the board. People are not pricing in 50 basis points. If he comes out with something higher than 25, we can bet that the markets are likely going to take a pullback on that. And that's why I would advise being a bit cautious here, because we're getting into the event. But in addition to the event, as far as the technicals are concerned, I do believe there's one more sort of bearish sign here. Okay, now this is potential bearish signatures. Now that can be found on the Mango dashboard. By the way, guys, I forgot to mention this. The Mango dashboard now has a 7-day free trial. Okay, so if you guys want to go ahead and take this for a test drive, you guys can go ahead and do so now. However, on the 4-hour time frame, as far as the bearish indicator is concerned, if you look at Bitcoin USDT, yeah, it's great. It's looking long. you got 28% on the trade. However, notice the flags. Okay, yeah, we have a bullish Ichimoku setup. Okay, however, now very, very recently we had this flag that went off, potential bearish divergence. Okay, so now if I get on over to the chart, put on my oscillators on the 4-hour time frame, where is the bearish divergence being established at? Okay, so we have this. So we have a higher high on price and a lower high on the RSI. Okay, but now remember, conditions, okay, when you look at potential bearish divergence, what are the conditions onto which this activates? Now, this is how this bearish divergence actually gets activated. I'm just going to knock off this line for now, okay, now that you know where it is. All right, we essentially want to see price live under this region right here, okay, which is 23,295-ish. As well as, please note the operator word that I'm using here, okay, and. So we want to see price maintain this as the highest point, okay, so anything lower than 23,295, in addition to price taking out this region right here, okay, $22,947. Alrighty, so we want to see a break of 22,947. Now remember, that was our critical region of resistance, now turned into support on the daily time frame. These are higher time frame levels that I've extrapolated out of, well, price action and vol, right? So make sure you're using this. But yeah, if we meet these conditions, that's when the bearish divergence actually triggers to the downside. Okay, at that point, we could see this consolidation melt down even further, thus losing potentially that 4-hour bullish signature that we have been maintaining since 16.6K. Okay, at that point, this would have then been a bull trap. Alrighty, now this is all I have for you for today. I will still advise being cautious here getting into the FOMC meet, because if the Fed comes out with anything more than 25 basis points, the markets are likely going to take a pullback, so be careful there. Okay, now I hope you guys enjoyed this video. I hope you guys had some good takeaways from here. If you did, make sure to smash that like button. And yeah, let me know if you guys are interested in me covering the altcoins, because, I mean, honestly, I would love to cover the altcoins. I've been looking at them, chart starring. Maybe not chart starring, but I have been hunting for altcoin gems. So yeah, if you guys want me to cover them, let me know in the comment section below. And also let me know which coins you guys are interested in. Alrighty, with this, I will see you in the next update. Trade safely, trade stress-free. Trade the mango way, trade the easy way. Ciao, you guys.